traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Happy Tuesday to you. Can today be turnaround Tuesday? Can it? That's a pretty big deal. The AOL Verizon deal. I'm wondering if it'll be enough to turn around this market because we've had some pretty. I mean, if you look at the, let's go over to the E-mini futures again really quick. We had a pretty steep sell-off overnight, and man, this is the green bar that you guys can see it here. This is the green bar that happened when that AOL deal was AOL Verizon deal was announced. But man, this market's trading heavy, very flaggy too, right? Look at that, very flaggy. So I don't know. I mean, I don't know if equities are going to be able to turn it around. It should. You would think it would. I mean, I would personally think it would, but I don't know, man. I don't know. But the dollar's starting to firm up. You can see the dollar's firming up against the yen, which may turn the tide a little bit for the dollar in general. But we'll see. All right, let's start off with the euro dollar. So let's just assume right now that the euro dollar has indeed peaked with a head and shoulder pattern. Well, that resistance would stick. But also, I really think you have to look at it from an hourly standpoint and say that's also a 618 retracement. Okay, so as long as the euro stays below 113, okay, because there's a 618 spike high right there. If we're going to develop another, if we're going to develop the shoulder, let's say it is a head and shoulder, but again, I'm going to reiterate, it's too early to identify a head and shoulder pattern, but let's just say it's going to form it. 113 should not be broken. 113 should be resistance. We could even snip new highs at 112.95 and then reverse, but 113 should hold as resistance. It's not major resistance, but it is resistance today. Okay, retesting the underside of that trend line. I mean, I hope it sticks because, like I said, I'm short the euro. I shorted the euro at 65 this morning, and I hope it rolls over. It'd work out in my favor, but I don't want to put too much. I'm not going to put too much faith in this right now. It's not like a layup trade because we really haven't even tested the underside of this trend line. Really, I mean, okay. I'd feel a little bit more comfortable if we had retested this already and failed. Then I'd be pretty excited about being on the short side of the euro right now. I think the dollar was a little oversold this morning. Okay. Anyway, where's support in the euro? So the support in the euro is going to be this. You can see all of here. You know what? Let's take this. I'm trying to recycle old lines. So recycling is good. I do this at home. I recycle everything I can, and I'm going to recycle trend lines too if possible. Okay. All right. So you got a lot of high traffic area through here. You can see it, right? Lows, spike highs. Very, very high traffic zone. That all comes in at 111.80. Let's just call it 85. Which can you see it now? I mean, I can see it just like this. Suckered in a lot of people in the longs overnight. We come down, flush the stops through 112, right? Then pop back up. Go to the 80s, pop right back up again. So I could see that holding a support. 111.85 today. Okay. Makes sense to me. I mean, but we are still in a bullish trend, as I marked up yesterday. That the euro dollar. I just didn't. Unfortunately, I'm not awake during some of the best hours to be trading, which is in the European hours. I can't physically do it, but man, sometimes I always think, man, if I did not have kids and I did not have If I wasn't married, my life would be a lot different as far as my work schedule goes. But because I'm a family man and I wouldn't trade that for the world, I do have to sleep at some point. So Gus is laughing that I said I'm recycling trend lines. I don't follow my Twitter all that often, but he tweeted to me, and I'm like, that's pretty funny. I'm glad you guys like that. Recycled trend lines. Okay. Pound. Let's go over, let's take a look at the cable. Pound dollar. Okay, so the pound, super strong. So last night, oh, now take a look at this. I just noticed that. Maybe a little shooting star. So support 156.15. I'm not saying you should short the cable, but if you're long, be prepared for a little bit of a pullback. Now, I think this is, let's go back, let's go to the 4-hour chart. So the cable resistance I see is 157.45. That's 161% extension of the last move. Okay, lower, 161% extension, 157.45. I wrote that down last night as resistance. And we're getting close, but we might have stopped shy. That hourly candle is not. That suggests that we might get a little bit of a pullback here. God, last night, 155.50. I didn't put in a bid in the dollar in the pound dollar last night, which I should have. 155.50. Of course, that was a huge breakout point, and I was sleeping at the wheel there. 155.50, and that was actually the low. No, the low is 60. 56. Dang it. All right. So anyway, 56. Let's just call 56.10 or maybe 156. That should offer pretty good support today. So if we dip down to 156, it's going to give you a buying opportunity, I suspect. Bullish. Okay. All right. Let's go take a look at the Swissy. Hold on. All right. All right. Swissy. You know, so because it seems to me that the Greek lifeline is going to be extended at least for another couple of weeks, right? Because Greece is making their payment today to the IMF. Um, Maybe it's safe to play the Swissy just for a couple of weeks back to the upside. Oh, you know what? Hold on. I had read that the pound dollar went through the 200 period moving average. Oh, it did. It did in the daily chart. Shoot. Hold on. We're going to keep this. That's the 200 period moving average. We're going to hang on to that. Okay, so let's go back to the Swissy. So the Swissy. Hold on. 50% retracement. That support comes in at 92. Shoot. Wonder if I should be buying this. See, it's a retest of this trend line. See this one right here? See that? Da. Ah, shoot. I didn't want to do that. Da, 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 da. I should be buying that right now. Oh, crap. I don't really want to buy the Swissy right at this moment, but I'm going to. I'll just take a half-size position here. So I'm going to buy a little bit, at picks them up at 34 here on the Swissy. It's a 50% retracement. I don't think you have to risk a whole lot. Your risk is maybe at this point below 91.75, right? That's support. That's going to be really critical support. Although I still think we're going to hold here above 92 cents. But even if we sell off, there's more support down here, 91.75. Okay. Resistance now will be back up here at 90. Let's just call it 93 cents. This one's more of an arrange because you can tell just going back over the Swissy here. I mean, we had a false breakdown a couple of, was it late last week, right through here, right? We had a false breakdown, but really this is more of I think a big range environment currently. Okay, let's go into the, did I get both of them? Yeah, let's go into the yen. This yen, and oh, if you guys missed it yesterday afternoon, because I did it yesterday late in the morning. I am out of all my yen pairs. If you guys missed that yesterday, I'm out of all my yen pairs. I'm not short any. I've been out of the dollar yen since like 119.30 or something like that. Um, but I I I I closed out all of my yen pairs yesterday. I just got frustrated with them. They're all small. Um, like my smallest one was the pound yen, which was going up in my face. I think that was what really just kind of frustrated me yesterday. I'm just like, you know what? I'm just going to get out of all these. And my bigger one was the New Zealand yen, which was, it was offsetting everything, thankfully. But it was so frustrating. I feel like I've just spun my wheels for the last 6 weeks in the yen pairs. So frustrating. But now that I'm out of them, I'm I probably got out just before we're going to see an epic fall in all of them. So I'm not opposed to shorting the yen pairs again, especially if risk starts to come off in the market. I just I just got frustrated yesterday. So just so you all know, if you missed it during the lunch money webinar because you weren't here, I know a lot of you Europeans you cut out after this, after the morning edge or close to. I just want to let you all know that I was very frustrated yesterday and just got. It was like I feel like a big load was off my back that I've been carrying for the last 6 weeks, just waiting for the market to roll over, and it just hadn't. Anyway, the dollar yen surprisingly is pretty strong despite the sell-off that we're seeing in the equity markets. So I'm surprised I'm surprised. Whoops. I'm surprised that the dollar yen's as strong as it is. Anyway, you can see this is just. Let's delete that and let's delete that too. I'm not even. I'm so unexcited about any of these yen pairs right now. Disenchanted. I think this is the term I need to use. I'm disenchanted with them all. It's not to say that I won't fall back in love again with these, but I don't even know what to do with them. They they don't like the dollar yen doesn't make any sense to me. It doesn't. It's not. I'm sure it's about ready to break out because it's winding up so tight, and it has for this last what 7 months, 8 months. I mean, we've been writing range environment for the dollar yen for so many months. The very same thing can happen to the euro too. We can end up being in a 105 to 115 range for like the next year. I hope that's not the case, but it very well could be. Anyway, dollar yen. What do we do with it? Well, I guess. I mean, minus the spikes there. 120.30 support. 119 and a quarter, right? So basically 120.30 to 119 and a quarter range. Crappy range too at that. All right, Canadian. So the Canadian came down a little bit further than I thought it would. I figured we'd come down to 120.50. You know, this is our range from yesterday, if you recall. Uh, Basically what we drew yesterday. Here, let's go over to this. Okay. But I think the sell-off that you see today is a direct result of crude oil rallying 2%. Okay, that was it. Now, the dollar Canadian is still in a range, and I'm still long. My cost average on the dollar Canadian is 120.77. I am down 32 pips. Yesterday I was up 32 pips. Today I'm down 32 pips. It's just, I'm just sitting in it. It's nothing really terribly exciting. But I'm sticking with it. The dollar Canadian. I still believe that we're going to be pushing back up towards 123.50 at some point. Especially, I think crude is done rallying. Okay. 127% extension of this range from yesterday or the day before yesterday or whatever, this little range we've been in, comes in at 120.20, so that should be support. Resistance, I guess, back at 120.65. I mean, I don't really even want to write that. There's no Canadian data coming out today. Support at 120.20. I mean, resistance is at 120.65, but we we can go higher than that. We can go back to 120. My decimal point's in this wrong place. 120.65 or 121. I don't. I think is entirely possible. Let me move the decimal point here. Okay. I think we can rally right back up to like this congestion area if we take out this support, and it's not too far away. So you know, especially if the Aussie and the Kiwi roll back over again, I don't. I think that's entirely possible. Okay. Um, we are in a new range, lower range than where we were for a couple months, but we're still in a range. All right, let's go over to the Kiwi. The Kiwi has bounced back to 74 cents. What is that what we wrote down for resistance yesterday? What did we have for resistance yesterday on the Kiwi? Can anybody tell me? 74.20. That's what we wrote down yesterday. Thanks, Greg. Oh yeah, because we gave it a little bit of wiggle room up to here, but it looks like 74 cents is sticky. 74, 74.20, I think, are two levels we need to write down. 0.74, 0.7420. We are in a range, although I am short the Kiwi, and I plan on staying short the Kiwi. I don't think there's much you have to pry my short Kiwi trade from my dead, cold fingers. You understand me? Yes, there's a Oh, there. I know a lot of you are European or Asians, and you're not from the United States. But uh, there's an old bumper sticker that a lot of Americans used to put on the back of their cars to say, "You can take my gun from my cold, dead fingers." Obviously standing up for gun rights. That's how I feel about the kiwi. You can take my kiwi, my short kiwi trade from my cold, dead fingers. Got it? That's right. I'm gonna stay short of the kiwi, folks. James says actor said and Bob says did Charleston Heston take over the show? He generated that. Did he generate that quote, Bob? Was that what it was? Charlton Heston? That's so funny. Oh my gosh. Yeah, and he's a big NRA person, James. That's right. That's right. Listen, I'm not part of the NRA, but I do believe in gun rights. I sure as hell do. I keep hollow points locked and loaded in my pistol because if anybody walks into my house, I'm going to take their kneecaps right out from underneath them. But you know, I what, but no one would do that, right? That's right. All right. Anyway, good news is I'm a great shot. I happen to be an expert shot, and I'm still pretty damn good. I go out to the range every once in a while. Even that yesterday I was sitting there. I was sitting at dinner last night. We went out for Mexican food last night because my wife was doing some things with the kids and another family. We went out to dinner, and it was like 6 o'clock last night, and I was looking around, and I'm like, I'm blind as a bat right now. I could not see a thing. My eyesight's going really bad. I'm really have to go see him. I gotta go see a doctor. All right. I don't know why I'm talking about this right now, so I'm gonna get off that subject. Let's go over to let's see. Support's gonna be 73 and a quarter. 73 and a quarter. Yesterday we wrote down 73.10 because this is a 786. We came really close to that. Obviously, we came down to 73 and a quarter and reverse. I still think 73.10 is going to be support. Even if we do breach lows, we have to be very cognizant of that support level and the Kiwi. All right, when I get back, we're going to do the Aussie. We'll do the Aussie. We'll do the dollar index. We'll probably have to take a look at those Nordic currencies and maybe even the peso again. So don't go anywhere, guys. I'll be back in a few moments. All right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I want to look at something really quick. The Aussie New Zealand is ripping right now, and which is great. I'm long, so I'm happy about this. We're pushing right to resistance. I'm thinking about actually exiting right now. No, I can't. If unless we drop back below 108, I have to stick with it. I'm going to watch it really closely from here, and I'm just so you all know, I'm long from 103.55. I'm up 465 pips. I don't I This is the level I was expecting is the 618 here at 108. Okay. So if we can hold above 108, I'm going to stick with it. If we drop below 108 for the day, I'm out. So I'm just letting you guys know that. Okay. I'm very, very Amanda said I had 108.15. Yeah, I mean it's the 618. I may not have had it perfect. I mean, I might be off a few pips. So you're probably right, but I haven't had it to the pip. So I don't get too worked up, as you guys know. I don't get too worked up in making sure that my numbers are exactly accurate because technical analysis is not accurate at all. It's thereabouts. That's why I tend to round up or round down numbers by a few pips because it's just all I know is this general vicinity. We got to hold above it. Basically, we got to keep a foothold above 108, and if we can keep a foothold above 108, then we're talking a move up towards 115. That's going to support the Aussie dollar. So with that being said, let's go over to the Aussie. The Aussie is in this is a megaphone pattern, which you look at the bigger megaphone pattern here, we should actually turn lower, but we do have a triangle, intraday triangle. And like I said yesterday, we would bounce off the support as long as we held above 108.50. Okay, so now support is going to be at these lows, not this red line. So let's remove that red line, and let me get rid of this because we rallied off those lows. Now we're at triangle resistance, and that's basically 80 cents. And I'm short. I'm short at 83. I mean, I'm short right here. I'm down 1.4 pips. I'm actually down zero point 0.4 pips right now. I'm sitting in because I don't mind being short as long as we're below 80 cents. All right. That's all there is to it. But it is going to feel a little stronger than the Kiwi, just because it's going to feel a little stronger than the Kiwi, just because the Aussie New Zealander is getting crushed right now. So expect it to be a better performer than the Kiwi dollar moving forward. Like if you want to buy commodity currencies, stick with the Aussie dollar versus the Kiwi dollar, because the Aussie New Zealand is ripping. So the Kiwi is just going to be underperforming constantly. That's why when I shorted the Aussie dollar, I'm only short a half size position, but I'm short a full size position in the Kiwi, and I'm staying short. I'm not even worried about my short right now. I'm up 166 pips in it, but I'm not even considering covering the Kiwi at the moment. Anyway, um, so support now is going to be down at 79 cents. So we have 79 to 80 cents, basically triangle. We're in a range. We have to, if we break above 80 cents, we'll be bullish. And then you got to start looking at the Aussie long against other things too, not just the dollar. You have to think about, okay, maybe the Euro Aussie will be a good short, and maybe the Aussie Canadian might be a good long, things like that. All right, let's take a look at the dollar index. So there's ones. Let's go to Dixie. Now here's the problem with the dollar index. There's a couple issues here. So let's go over to the daily chart. First of all, the daily chart, we're holding below this broken trend line. You see that trend line? Right? Not only are we holding below it, but we're rejecting moves back up to it. Does that have me a little worried right now, being long the dollar? Yes, it does. But that doesn't mean like the dollar is going to fall out of bed like right now. But what I am going to tell you is, unless we get above whatever yesterday is, so let's, hold on, I'm going to sneeze. Yes, I would have, you wouldn't want me, I would have blew out your speakers there. Oops, let's get rid of that. Okay, so this right here, that right there is the bull bear line. So what I mean by that is, as long as we are below 95 and a quarter, so 95.25, that is key resistance. So if we get above 90, hold on, 95, what is it? 25? Okay. As long as we're below 95.25, we are bearish, okay? Because what we're doing is we're holding below that trend line. Now, I know I'm long the dollar. I know you go, well, Blake, you're long the dollar, so we're bearish, but you're long. I know I'm trading counter trend. I think it's a little bit of a range right now. I know I'm not like sitting here going, the dollar's going to hell in a handbasket. The dollar's actually holding up quite well with considering this break. Considering that breakdown and how we're holding below this trend line, we're actually holding up really well. However, if we pop back above 95.25, we're gonna get a false breakdown and we're gonna reverse. Now let's go back to a 4-hour chart. You can actually, let's go to an hourly, and let's zoom. Let's do this. You guys can hear the birds this morning. I actually opened the windows. It's so nice outside right now. Although it's going to be like 100 degrees today. It's so nice in the mornings here. Still. Whoops. Ah, ah. Okay. So that low, what's that low? 94 and a quarter. 94 and a quarter. The support. Okay. But if we get above 95 and a quarter, that's going to turn that from being bearish to it's going to neutralize it. Okay. All right. Okay.